Hello everyone, welcome back. Got a really good one for you today. Let's jump right into it. Fear. A lot of fear in the marketplace right now. I'd say everybody's a bear. Everybody's a bear now. Even Cardi B, Elon, Larry Summers, Druckenmiller, Gunlock, Kramer, Schiller, the mainstream. So hey, Buffett probably snuck off and is buying right now. Headshot. That's just my thoughts. My thoughts on it. Berkshire Hathaway, Cash Fortress are buying when blood's in the streets. I'm not flipping. I still like high growth tech. I like oil. I like Bitcoin. I like gold. Crazy bid in the dollar right now though. The yield on the 10-year is at 3.25. That's really scaring the market. Look, if you see the 10-year yield keep rising like 10-15 basis points a day, look out below for all the risk assets, even like the more conservative ones like real estate, because these yields and these rates going higher and the dollar going higher is just crushing risk assets, anything. We had another liquidity event in crypto. Celsius imploded. I don't know that event is akin to what we saw in Luna, but you know, more bodies floating to the surface in the altcoin space, kind of scary. So just max fear, but recessions, which I would say now the S&P 500, 21% off of its recent highs. We're in recession in the financial sphere, along with the economy. These things are generally pretty short though. I would actually expect the Fed to start taking rate hikes off the table, which is crazy. The Fed needs to do a rate hike on Wednesday, 50 basis points. Maybe 75 to fight inflation in consumer goods, but long term, I don't think the market can handle 14, 15 rate hikes. So if the Fed takes some interest rate hikes off the table, in their rhetoric at least, maybe go from 14 right now down to 9, the market could actually start to move higher. So I'm tentatively bullish while everyone's bearish. I'm being a brave bull. I'm the only bull at the table. That's usually a pretty good contrarian indicator. But hey, we could also fall a lot further. Things in Ukraine continue to deteriorate. Inflation continues to be a problem for everybody. Supply chain issues continue to be an issue. You know, shortages in food over the next 6 months. You're hearing a lot of weird stuff for the real economy, and now the financial sector is having it's going through its hell. Generally, you want to be optimistic if you have good income and cash flows and disposable cash. Not a buy or sell recommendation, but you want to buy when the least amount of people want good assets, right? And then you want to sell when the most amount of people want the good asset. And the low point is when the least amount of people want an asset, and the high point on a chart is the point at which the most people want to buy that asset. And you kind of got to flip on them. You know what I mean? If you're trying to buy low and sell high, you kind of got to be contrarian. Just my thoughts on it, not a buy or sell recommendation. Maybe there is, for the bearish case, the reason to have dollar suspenders right now and dollar everything and dollars under the mattress, you know, the case for that would be your 10-year yield keeps rising, rates keep rising, the dollar keeps rising. Crazy stuff. So I'm seeing max fear. Don't rattle, you know, chill. This is a peaceful place, right? Where we have good perspective and headspace to make the best possible decisions for ourselves and ours. So hey, if this is even unintentional ASMR for you to fall asleep to, hey, I'd rather it be that than all like the doom scrolling and doom porn. But that's just how I play my game. You know, you want to try to be cool as a cucumber. Believe me, guilty. You know, we all, you know, people freaking out right now. Hey, let them do their thing. They got to freak out. I'm sure all the YouTube thumbnails for all the other talking heads are like flames, and you know, you're going to be hearing a lot of negative rhetoric over the next 72 hours because there's not much of a bull case. But I'm saying when there isn't much of a bull case, that's generally at least when, you know, when you should strike. Hey, Warren Buffett's going to strike, okay? I think in a few weeks we'll be reading about Warren Buffett and the Cash Fortress striking. So, you know, try to be maybe contrarian about this whole thing and be chill. There is a chance too, if an inventory glut appears and unemployment starts to go up, you could have a situation where the Fed takes rate hikes off the table, we start to see deflation in consumer goods, and that would actually be bullish, I think, for asset classes. So, there's a bullish case to be made in all this madness. Don't get all weird and freaked out. It's usually smart to do the polar opposite of that, but everybody's a bear, Elon's a bear, Cardi B's a bear, Larry Summers, they're all bears, Kramer's a bear, Schiller's a bear. Everybody's bear now, so take that. That's really an important nugget. Sentiment is really bad right now. Fundamentals, well, at least valuations are coming down, and I think it's actually a good thing that the financial sector is coming more or less to par with the real economy. The real economy, in my view, has been in recession globally for some time. It was just a matter of not being in recession in asset prices. Well, now we have that recession in asset prices. So I don't see that kind of price discovery and revaluation as a bad thing fundamentally, but a lot of people are also looking at their fundamental analysis, and they're going, dude, rates are going up, yields are going up, and they're going to stay up, and they're going to stay elevated, and it's going to really start bankrupting people. So crazy. Yeah, Celsius blew up over the weekend. Don't know if that's akin to Luna, but still really bad for the alt space. Max Fear, a lot of liquidity events. So try to be a brave bull and keep it together. And things aren't looking good in Taiwan and the Taiwan Strait. Things aren't looking good in Ukraine. We will talk about the dollar empire later on this week, but I think right now is more important. Wednesday's your biggest day. So of this week, Wednesday is going to be a really big day. That's the Fed. Personally, I think the Fed is going to come in at 50 basis point hike on Wednesday. So there you go. Take that. I don't think they're going to do a 75 basis point hike, but they will do rhetoric about a 75 basis point hike for July if inflation and consumer goods persist. Maybe they'll do like some aggressive hikes over the summer, and then maybe because the market's already baked in 14 rate hikes by 2023, maybe the market mid to longer term will start taking some of these rate hikes off the table. And that would be good for high growth tech, good for oil, good for gold, good for Bitcoin. So I'm trying to not discuss so much right now. I'm trying to have a conversation about where we'll be in 6 to 9 months from now. And that's ultimately what's going to set risk asset prices mid to longer term, and maybe some rate hikes will come off the table if inflation comes down over the summer. There's a bullish case to be made in all of that. So I'm trying to think about 9 months from now. So everybody's a bear. I'm trying to be tentatively bullish. Definitely not going to freak out, not selling into weakness. I wish I could buy more of my favorite risk assets at discounts. That's just kind of where I'm at. Not a buy or sell recommendation. It's not. We're just hanging out. Yeah, that's really all I got for right now. You're just all eyes on the Fed. Fed's on deck this Wednesday. What's scaring everyone, I'll leave you off on this. What's really freaking out the big players at the table is the Fed is trying to tighten into a really uncertain growth regime, and while simultaneously being quote unquote way behind the curve and getting inflation under control, getting ahead of inflation and raising the interest rate back up to a normal level. They say it's all like that but they're behind the curve. I say they are the curve. It's much more complex than that. They are the curve, you know what I mean? They're not behind it. So the Fed is throwing a wrench into everything, and it's freaking out the big players at the table. They think that could cause an unwinding of like some multi-decade debt expansion. So, there's like some fundamental cracks being, seen and observed and felt underneath the bedrock of the dollar in the financial system. And that's leading to a lot of people just saying rates and yields are going to keep going up, and it's going to really start slowing down the economy, and the Fed's just going to pull the plug and bankrupt everybody and take the punch bowl away and send risk assets into the worst hangover of their life. That's the real bearish case, and that's why everyone's freaking out. But I'm not, and generally recessions are over before they begin. So you got to, I think Buffett's off buying right now. To be honest, I think all the big players at the table are being sneaky buyers right now. So watch for that and try to be optimistic while nobody else is. I know the elites of the table are thinking about that. All we got to do is have the Fed get inflation under control, if nothing more, with some 50 basis point hikes and some rhetoric. If inflation kind of comes down on its own, Fed can take some rate hikes off the table. That should send risk assets higher. That's kind of your bull case. Bear case is rates and yields keep rising, dollar keeps rising, economy keeps slowing, Fed's tightening into a slowing economy, everything crashes. That's your bear case. I'm leaning the bullish case, but hey, that's just me for right now, and I'll keep you guys updated. So, you know, just hang tough. I'm hanging tough. I'm not freaking out. Don't freak out. And if anything, how you act right now determines how much you'll enjoy all-time highs later. So, hey, that's all I got for you right now. And yeah, just let's hang on. Till next time.